What if I told you the housing market is standing on the edge of a major flip, and most people don't even see it coming? Right now, while everyone is busy arguing about whether prices will crash or keep rising, something much bigger is happening under the surface. A shift, a turning point, the kind of moment that creates winners and wipes out the unprepared. So if you're thinking about buying, selling, or even just trying to understand where the economy is heading, you need to pay close attention to what I'm about to break down. Let's start with what people think is happening. Most headlines will tell you the housing market is cooling or stabilizing. Sounds harmless, right? But those words don't tell the full story. Because what we're actually seeing is a tug of war between forces that don't usually collide at this level. On one side, you've got high interest rates squeezing buyers out of the market. On the other side, you've got limited housing supply keeping prices from falling the way people expected. That tension right there, that's where the flip begins. Think about this. For years, cheap money fueled the housing boom. Interest rates were low, borrowing was easy, and people rushed into real estate like it was a guaranteed win. Prices skyrocketed. Bidding wars became normal, and homes were selling within days. But now, that environment is gone. Interest rates have climbed dramatically, and suddenly affordability has become the biggest issue in housing. And here's where it gets interesting. When affordability drops, demand should drop too. Fewer buyers, lower prices. That's the classic cycle. But this time, something unusual is happening. Homeowners who locked in ultra-low mortgage rates during the boom years don't want to sell. Why would they? They're sitting on 2% or 3% loans. If they sell and buy again, they'd be stepping into 6%, 7%, maybe even higher. So instead of selling, they're staying put. That creates a supply problem. Fewer homes on the market means prices don't fall as much as expected, even though demand is weakening. And that imbalance, that's the key to understanding the flip. Because here's the thing most people are missing. Markets don't move in straight lines. They build pressure, like a coiled spring. And when that pressure finally releases, the move can be fast and unexpected. Right now, the housing market is building that pressure. Let's talk about buyers for a second. A lot of them have been sitting on the sidelines, waiting for prices to drop, waiting for rates to come down, waiting for the perfect moment. But here's the problem with waiting. Everyone else is doing the same thing. So the moment conditions improve even slightly, that sideline demand can rush back in all at once. Imagine interest rates dip just a little. Not even a huge drop, just enough to make monthly payments feel manageable again. Suddenly, thousands of buyers who were waiting jump back into the market. But remember, supply is still tight because homeowners don't want to sell. So now you've got more buyers chasing fewer homes again. That's one version of the flip, where prices start rising again faster than people expect. But there's another side to this story. And this is where things get even more serious. What happens if economic pressure increases instead? What if job losses rise, or inflation stays stubbornly high, or people simply can't keep up with higher costs? In that case, some homeowners may be forced to sell, whether they want to or not. And if that starts happening at scale, the supply situation changes quickly. More homes hit the market, buyers are still cautious, and suddenly prices can drop faster than expected. That's the other version of the flip, a downward shift that catches people off guard. So which one is it, up or down? That's the wrong question. The real answer is that the housing market isn't moving as one single thing anymore. It's fragmenting. Some areas are already seeing price declines. Others are holding steady, and a few are still rising. The flip isn't just about direction. It's about how unpredictable and uneven the market is becoming. Let's break that down even further. Local markets matter more now than ever. A city with strong job growth, limited land, and high demand might continue to see price resilience. But another area with slowing population growth or economic struggles could see prices fall significantly. So when people say the housing market is doing this or that, they're often oversimplifying a much more complex reality. Now let's talk about investors because they play a huge role in this shift. During the boom, investors piled into real estate, buying up properties to rent out or flip for profit. But higher interest rates change the math for them too. Financing costs go up, profit margins shrink, and suddenly deals that looked great a year ago don't make sense anymore. Some investors are already pulling back. Others are trying to offload properties before conditions worsen. And if that trend accelerates, it adds another layer of supply to the market. More supply, less aggressive buying. You can see how that could push prices down in certain segments. But again, it's not that simple. Rental demand is still strong in many places, which keeps investors interested, especially those with long-term strategies. So, instead of a mass exit, what we're seeing is a shift in behavior. Investors are becoming more selective, more cautious, and more strategic. And that shift contributes to the overall feeling of uncertainty. The kind of uncertainty that often comes right before a major market move. Let's bring this back to you. Because whether you're a first-time buyer, a homeowner, or just someone trying to make smarter financial decisions, this matters. If you're a buyer, the biggest mistake you can make right now is thinking you can perfectly time the market. That's almost impossible. Instead, focus on affordability, stability, and your long-term goals. Because if the market flips upward, waiting could cost you. And if it flips downward, you need to be financially prepared to handle that volatility. If you're a seller, the game has changed. The days of listing a home and getting multiple offers overnight are not guaranteed anymore. Pricing strategy, presentation, and timing matter a lot more now. Overpricing in a shifting market can leave you stuck, while realistic pricing can still attract serious buyers. And if you're just watching from the sidelines, trying to understand where things are going, here's the big takeaway. The housing market isn't about to move in a predictable, smooth way. It's setting up for a flip driven by competing forces. And when that shift happens, it could surprise a lot of people. Because flips don't happen when everyone agrees. They happen when expectations are misaligned with reality. Right now, some people are convinced prices will crash. Others believe they'll keep rising no matter what. But the truth is, usually somewhere in between, and often in a direction most people didn't fully anticipate. So instead of asking, is the housing market going up or down? Start asking better questions. Where is demand strongest? Where is supply increasing? How are interest rates affecting behavior? What are investors doing? Because those are the signals that tell you what's really happening beneath the surface. And here's one final thought to leave you with. Every major shift in the housing market creates opportunity, but only for those who understand what's changing before it becomes obvious to everyone else. So stay informed, stay flexible, and most importantly, don't get caught reacting too late, because the flip isn't coming someday in the distant future. It's already starting.